Good morning. It's January 12th, 2023. Today we're going to talk about REITs. We know that REITs were crushed last year versus general equities. It was at a 22-year low according to ASR. And I'm going to show you first a slide. This is the iShares Global REIT ETF, REET. And so, many have bounced back from their fall lows. I showed you here, yellow line down last year. We get to roughly, part of October, and then it's been up and to the right. Fixed income yields came off their highs, and REITs had priced in a pretty big drop in underlying property prices in 2022. So it makes sense that these have had a comeback. But while listed real estate has bounced back 12% over the past few months, there could be room to run if central banks pause and potentially rally if they pivot, which is not our base case, but I just wanted to point that out because many of you are probably taking a look at REITs just like we have on our portfolios. ASR has a good chart showing not only the overall REIT performance, but also the relative of the underlying subsectors. Here you can see the retail and industrial, so the green light and green dark lines have outperformed, whereas hotels and residential, that's the kind of spotted purple line and the maroon type line, they're lagging. It makes sense, right? If rents are pressured, also fewer folks in some of the hotels or underlying values of those properties, along with the US 10-year down roughly 60 bips from the 4-year highs. You've got lower mortgage rates. You've got industrial REITs tending to trade as growth/long duration stocks. So with bonds and also tech bouncing, you can see why these might be performing. But even the more pro-cyclical retail sector could be due simply just to a valuation reversal because it was down so much, they took it on the chin and it's coming back. But again, residential is more short duration, but it took it on the chin and has stayed down. I think people are really worried about new rents pricing at lower levels. Now what I want to do is I want to take a look at Longbow. So here we have a few real estate ETFs, the VNQ and the XLRE, as well as a number of individual players that you probably know. Of course, these are very different businesses and have different fundamentals. But from general real estate to cell towers, to data centers, to storage facilities, I tried to put a number of them in there. But you can see that they're all pretty much priced at the top end of their range. So that white bar, which is the security price, is at or above, or very, very close to, I should say in some of these cases, the top end of the range, which is that red bar for the trading ranges. And most of them have turned for a short-term signal to bullish. You've got a few neutrals in here. Most of them are short-term bullish. And then even some of them have turned intermediate-term bullish. And some are working that off because of the price action that you might see some of these change, which then it can give you much more confidence in using the trading ranges in the top and low ends of the ranges once you see a shift from neutral to either bullish or bearish. I'm going to show you there's 4 names with bullish momentum signals for both short-term and intermediate term. You've got Prologis here, you've got Crown Castle, Equinix, and Welltower, right? And what you can think about is that if they're bullish in the short and intermediate term, you can probably have more confidence using the lower end of the trading ranges if you're looking to buy into that position. So for example, in Prologis, let's take a look at what the trading range was showing us. And sure enough, when it hit the low end of the range here in November, you would have done okay and gotten to the top end of the range. Again, when it hits it here in December, and here, this looks like the far end of December, at the low ends of the ranges, you can make money on that type of security because the trajectory is going in your favor. It's hitting a low end, but then the trading range has a little bit more confidence to it. Let's take a look at another one. Maybe I'll pick up. Here's Crown Castle. That was another one on the bullish signals. Let's take a look at that trading range. And maybe I'll pull it in even closer if I can see that here. Yeah, so here you've got it in December, and you have a lot more confidence to be hitting when it's hitting the low end that it's on that upward trajectory. Let's see, in the 3 months, kind of the same thing here. You saw it back in November. You've got it here pretty much close in the December times, and then the one we saw before. So that's how I think about when you can have several things moving in the direction that you want to be going, which is if you're trying to go long, you want to see these bullish, versus if these are bullish, you can use the top end of the range to be trimming and the like, but it's like swimming against the tide. You want to have everything in your favor. So more it's about buying from a technical standpoint. Again, not fundamentals, technically when it's the low end of the range. But what do we do? Because you might be looking at them and saying, hey, you've got a Longbow core signal of short here. Although I would say the signal strength is in the middle. And why is that? Because these have popped probably from bearish to neutral. And while, it's at an implied volatility discount, so it's kind of, nothingness at the time, it is at the top end of the range. So I'd be much more careful using this kind of security. As you can see, it doesn't have the same sort of up and to the right trajectory as the other ones we mentioned that had bullish formations, short-term and intermediate term. These are really neutral, so kind of chopping around. So again, it did work in this case to go from the low to the high end, but you have to be much, much more careful. And I think that that's what the core signal is telling you here, is that while it's not, super confident because it's not in a bearish formation, otherwise you would see this a much stronger signal. It's saying this really, doesn't make sense. It's trading within its range. There's no real direction here, so you have to be a little bit more careful. So that's how we'd use the Longbow platform if you're considering REITs or thinking about maybe individual securities and which one to enter from a technical standpoint and the timing of that. Again, fundamentals are up to you. Your portfolio decisions are up to you, but that's how we use the Longbow dashboard for some of the names that we're looking at. Talk to you tomorrow.